Welcome, everyone. I'm Mike Mershazadeh.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journey, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey, everyone. Welcome back to another exciting episode of the What Matters podcast. I'm your host, Mike Mershazadeh.
And I'm Ashley Ward.
And today we're thrilled to have our special guest joining us, Phillip Hammond, President and CEO of Linscomb Wealth in Houston, Texas.
Thanks for having me.
Yes.
Phillip, we're very excited to have you on the show today. With your extensive experience in leadership roles, we're eager to hear your personal insights in the industry. Let's dive right into our conversation. So, Phillip, let's start by exploring your unique journey in wealth management. Can you share with us your origin story and the experiences that set you on this path and leading you now to your role as president and CEO of your firm?
I'm sure glad to share that background and history. Maybe I'll cover a little bit of my own and a bit of the firm's as well. For me, I grew up in Lubbock, Texas, ended up going to school at Texas Tech University, which has a great financial planning program. Out of that, I ended up taking a position here in Houston for an independent trust company. And that's really where, for me, my career took off and, began doing financial planning, investment management, was fortunate enough to get involved in a number of different projects for the firm, started moving into some leadership type roles. And, from there, had an opportunity to go work in Dallas with a multifamily office. And so a little bit of a different flavor of things, but had a great experience up there. But it was about 2 years in, I was sitting around the living room one day and look up and there are no pictures on the wall. And I kind of look at my wife and say, okay, this Dallas thing isn't very permanent, is it? And she confirms that that is the case. So out of that, we started looking for, a home back here in Houston. In this business, you work with individuals, you work with clients. You really want to be somewhere that you can stay for the long run, something that's really sticky. So we were very careful in that search as we looked at coming back, and was very fortunate to find Linscomb Wealth. And just, I've been here about 11 years now, and it was just great from the start. I've connected with the folks here and started out in a wealth advisor path and helping work with the financial planning team. And it was maybe a year or so into that process that the chairman, CEO at the time, and the vice chairman came to myself and our now CIO and said, "Hey, what would you guys think about working not just on clients, but working on behalf of the firm and seeing what we can do to grow the firm?" And so after giving that some thought, we said, "Sure, let's give that a try." And ever since that, we've been on the path to focus more on the business leadership side, as opposed to being as directly involved with clients. And that's really been my journey for about the last 10 years. And it's been an exciting journey. We've got to do a lot of different things and, do it here with a firm that's been around for more than 50 years. And it's pretty unique in this business to find a firm that's, plus 50 years old. And so, feel very fortunate to be where I am and to have had this opportunity and, to get to help lead, where we're headed for the future.
So talking about that, you started off at Linscomb as just as an advisor, right?
Correct.
And over the last decade, you've grown into the president and the CEO of the company. Talk to us about that. How did obviously the management had came to you and they saw some leadership potential. Was it straight from an advisor into the president CEO role, or was there gradual steps along the way?
No, it was a gradual process. Started out in an advisory role, had a few other areas I was helping with at the time, was beginning to participate in, certain management committee type discussions. It was about 2018, I think it was, that I was promoted to president, and about a couple of years ago that became president and CEO. So it was a gradual process. And it was also part of a succession planning process, where G1 was looking to get a generation 2 involved. And so it was very, very, very thoughtful and laid out in the evolution.
So when you had started, or when you obviously had started the company, you guys are nearing close to 5 billion in AUM now, if I'm not mistaken. We get public information. So if I'm wrong there, please feel free to correct us.
Sure.
And tell us about that growth there. Obviously, when you had started there 10, 11 years ago, what was the size of the firm at that point to now?
Yeah, I'm not going to remember the exact size, but it was plus or minus about $2 billion in AUM. Today, I would like to say, hey, we're at 5, but we're maybe a little closer to 4.5 billion in AUM. But I appreciate you rounding up for us. Um, but yeah, it's been a nice growth trajectory, and most of that has been organic growth. It's come from our business development, our marketing efforts, the work of our advisors who are out there who's doing a great job for clients. And it was 2019, the firm did its first ever, and to this point, only acquisition. So we did have a little bit of inorganic growth in the process as well.
So when you guys had done that inorganic growth acquisition there, was it a struggle to get the new company aligned culturally with Linscomb?
Actually, it was not. Our chairman today, Walter Christofferson, as he said, as we started out on that path to look at acquisition opportunities, said, Philip, we're going to kiss a lot of frogs. And, you go out and you have some of these initial conversations and you talk to folks. And, in this case, it was a firm in Atlanta, and it really just, we hit it off right off the bat. It was a great match from the start. So the cultural piece actually in this case was very, very easy. And the rest of the integration, I think has gone pretty well. We've definitely learned some things. There's things we would do different, the next time around, and that we've definitely learned, and so on. But culturally, just right from the start, it was a match.
And how many total advisors or wealth managers do you guys have presently?
The number's about 20. It sort of depends on how you count it and who has dual roles, but 20 is a good number to use as reference.
How many total teammates do you guys have there?
Just about 60.
Wow. God, that's some phenomenal growth over the last decade.
Yeah.
It is. It's been exciting.
Thank you for sharing.
Yeah, most definitely. So, Phillip, what are some of the most valuable entrepreneurial lessons you've learned along the way of your career? You've started as an advisor, you've grown to CEO and president, which is very impressive. Any advice for aspiring wealth managers looking to navigate challenges and really carve out their own path in the industry?
A couple things come to mind, thinking about those lessons over time. One, I pretty early on, I had a pretty good sense of, what I would like to do. I liked the investment business. I liked the planning business. I liked working with clients, but I knew at some point I really wanted to take a bigger role and be involved in management or leadership. And so I was always very careful to make that known. And I think it's important that folks that are coming along in their careers that they verbalize that they say, hey, I would love, if there are opportunities for me to be involved in a project or help with something, I'd love to raise my hand and do so, because, you get busy, you get moving along, you just tackle things. And if you don't know that somebody is, interested, they might get passed over. So raise your hand and say, hey, I would love to jump in there and be a part of things and learn and take on other projects. The other piece I would say is just, I think I've done, what's helpful to me in my career was being strategic. Always making sure I took time to step back and really lay out a game plan and a goal and, how I would achieve that. And so I'd be strategic and raise your hand.
I like that.
Like-
It's I think that in a lot of people's minds, they sit there and, maybe when you got promoted to, president and CEO, they said, oh gosh, why was I overlooked? Right. And, I like that you said that, it's, a lot of people, they'll sit there and be quiet and think that just because they work hard, that should be recognized. Right.
Right.
But, you got to get after it. And so,
Right.
building on that, let me ask you this, in the last decade or so, we've seen some, it's after that whole 2009 era, but, I'd say, from 2013 until now, since that you've been at the firm, been a couple blips in the radar there. You had 2020 and then 2020, 22. And I know that you've been in the industry for a while, with markets being up 70% of the time, down 30% of the time. What would you say was your most challenging time in the industry, and how did you guys navigate out of it?
Well, having lived through, late 90s and to kind of that 2009 era, I've got a lot to choose from in terms of challenging times. And, I think, we talk about it here and we talk about change, and there's always change. And, there's sort of the business related change, which is market related. And then there's, things can change at the firm level. So, you have to be prepared, for both sides of that. But, I would go back to, the Great Recession, 2008, 2009, that was probably the most challenging time. And, at the moment that was, still relatively new in my career. I was working as an advisor at the time. And so, on the phone and in client meetings, having those conversations. But, there's a great lesson in that as you go through that type of environment, and then you come out on the other side and you see, yes, okay, markets are going to be volatile, but it does work. And if, a business runs a certain way and takes great care of clients and has a certain culture about it, you're going to be okay as well. And so, as you kind of go through a period that was generally favorable, and then you get into something like the pandemic of 2020, that's going to be a challenging environment. But you've been through some hard times before, and you can look back and say it is all going to be okay. And it's really important that you stay with the discipline of your investment policy or your financial plan or strategy, however you refer to that. So plenty to choose from, but I would say that 2008 2009 period just really stands out and was very formative for me.
Okay. So with your commitment to serving the high net worth clients there and ultra high net worth individuals and families, can you share a client story that you feel exemplifies the values and ethos of Linscomb Wealth, or where you felt a significant impact that was made?
Sure. I think I have to be careful here with not going too far and getting into the testimonial category, but I think I can speak generally. And our firm does just our team of advisors and the team that worked alongside them to take care of clients, they do a phenomenal job. And I have the pleasure of you get to pretty routinely hear the stories and the thanks and the appreciation from clients. But I really think it comes down to a few simple things. It's it's the fiduciary model. Clients most definitely appreciate, and that's typically the number one reason they seek us out, is they want to work with an advisor that is held to that legal standard and of working in their best interest. And so I think that trust is there. You hear that routinely from clients. But we have so many different versions of stories where folks came in, life was busy, they had a lot of decisions in front of them, whether it's an executive that's out there that's coming to retirement and has different equity plans or retirement programs that they have to work through in terms of how to diversify or take distributions. And then how are you going to start? You're used to getting a paycheck, and now you have to take money out of the portfolio, and how do you do that, and how do you do it in a tax efficient way? Or is it the family that's accumulated a pretty significant amount of wealth and needs help with estate planning? And how do you structure all that, and how do you structure it in a way that not only achieves the tax goals, but also achieves the family values? That's really important also. So again, kind of dodging any specific situation here to not get myself in compliance trouble. Just day in and day out, our team just does a fantastic job with hearing what's important to our clients, putting together a plan that really fits their needs, and carrying that out. And again, I'm in a lucky position to get to see and hear a lot of the thanks and appreciation that comes back from our clients for our advisors and our client service team.
And thank you. And do you manage clients still yourself at all, or?
I have at this point a very small group of clients that I continue to work with. And we talked about that. It was a little bit of a transition. You go from the position of being an advisor, and you have clients, and that's very established in this business. And these RIA wealth management businesses are starting to mature, and it's more common to have dedicated management teams. But we felt in my role and a few other executive roles here at the firm that even though you're going to be executive management and the majority of your time is there, it is important that you carve out some time to continue taking care of clients, so that you don't lose touch with what is the core purpose of the business.
Exactly. And
Yeah.
as it stands, how do you presently inspire and motivate your team to achieve their full potential, not just during good times in the market, right? Because when there's great times in the market, such as kind of a year like this year, where everybody in this space looks like geniuses, right? But there's new people, there's new advisors and newer people that get into this industry. And then they'll, run into a 2009 or a
Hmm.
2022. You know, how is it that you are able to keep them motivated? You've had the experience before, and
Sure.
talk them off the ledge.
Yeah, a lot of it's just that it's consistency in messaging, it's consistency in process. I wish it was I had some great locker room speech or something that got it, gets everybody fired up. But it really does come down to, we've got a great process, we've got great values as a firm. Live the process, live the values. Being a Texas Tech guy, it's a little bit hard to give credit to an A&M basketball coach, but my son was at an A&M basketball camp a couple of years ago, and their coach was, he used the reference of CPR. And he said, he's telling this group of young guys, if you go out there and you stay focused on your character and you stay focused on your process, the results will take care of themselves. And so, that message really hit with me, and that's something that we continue to message here with the team of we've got a firm that's been around a really long time. It's this firm that entirety of that time has stuck, stayed true to its values. So if we keep that character, we keep that team collegial approach, that fiduciary model, and we go forward and we continue to work on how we do things for clients and try to do it at a higher and higher level every day, we don't have to worry about much else. The rest will take care of itself.
And let's talk about you know if you have insights on Linscomb and what's your guys, where do you guys see yourself in the next 5 years? And you had talked about uh, you know you guys had put a G2 in place there. I believe you're part of the G2.
Correct.
And so talk to me about that. Where do you guys see yourself in 5 years from now? Obviously you said that you guys have grown from almost over doubled in size since you've been there. And where do you see yourself in the next 5 to 10 years out? And with the G2 in place, um, you know are you guys developing the G2 with other individuals in your company? Uh, as we all know, there's I think they said tens of thousands of advisors retiring in the next several years, right? And so bringing that G2 in place is pretty important. As we've talked about on most of the podcasts. What's your guys' outlook on that?
Yeah, so on the succession planning is important, and we still have a number of our G1 advisors that are still very active in the business today, and we feel very fortunate for where we're at. I mean, we've got multiple generations. So you have kind of brand new out of school working in the business, and you have what really amount to sort of almost pioneers in the industry. For what this niche of the market is, and so we're fortunate to be there, but it is really important that you go through that succession planning process and that you are bringing G2 and in some cases, starting to really think about, G3 into the business. And so, and that really plays into kind of your other question on, where would we like to be in 5 years? And, talked about the importance of being strategic in your process earlier. So as we look ahead, we're on the second iteration of our strategic planning. Back around 2018, 2019, we did our first ever 5-year plan. We've updated that recently. So as we look out over the next 5 years, I mean, we would like to be a firm that doubles again in terms of, assets under management and revenue. And to achieve that, you have to start to think in some different ways. You have to start to build more of that infrastructure. You have to make sure you've done the succession planning. You have to make sure you've done the recruiting for G2 and G3 and brought the team in, and how you train them and how you structure all that to work together. And so we've done a lot of structural work. We've done a lot of work on governance. We're working on a number of initiatives right now around marketing and business development. So there's a lot of strategic work that's going into how do you lay that strong foundation if we're really going to go out. And today we're headquartered here in Houston, and that's home. We've spread out a little bit geographically, but we would like to continue to grow and continue to see that happen here in Texas, but also in further out the southeast region of the U.S. And if you're gonna grow in that way and have other remote offices again and grow to the level we want, you've got to have that infrastructure. You've got to have the playbook. You've got to have a playbook for marketing, business development, planning, investments, operations, client service, compliance. You've got to be able to check all those boxes that are going to attract people to come work with your firm.
And how many total offices do you guys have now?
We have 6. So we here in Houston, we have one in the Woodlands, which is a suburb of Houston. We have two. We have Huntsville and Birmingham, Alabama, Atlanta, and then a presence in Austin in the Texas Hill Country.
So Texas, Alabama. You said Atlanta was that?
Atlanta, correct? Yeah.
Oh, cool. And so with when you said business development, what initiatives are you guys taking in regards to the business development approach there?
Right. So, I mean, I'd say it's a two-pronged approach. One, kind of a complete refresh on the marketing side. You've got a number of different facets that you want to, we still do some traditional, we're going to do more on the digital side, updating messaging, just, looking at a number of different things just to make sure you can get out and communicate with folks effectively and get your content and messaging out there in a way that will draw people to look at your site and to check out what you've been doing for 50 plus years. On the business development side, we're doing a number of things. We recently hired a business development officer to come in here and help us develop centers of influence. We have a parent company that is a bank, so being an ambassador with that bank to go out and make those connections and tell our story there. So getting out there and being a little bit more sales business development oriented. Some of what we're doing from a structuring standpoint to further promote a little bit of a little bit more of that business development culture of, hey, if we're going to grow at this type of level that we've said we want to grow and we want to continue to replenish the business in the pipeline, we've got to be out there doing those things. So we work on elevator pitches. We do a lot of preparation. Today, still most of our new business still comes from share of wallet, client referral, but we continue to see growing flows from other areas as well. So we want to have a multifaceted business development strategy.
And so being that you guys have been around for over 50 years now, obviously where the industry where the individuals that had started at the company 50 plus years ago, and by the way, are any of them still there?
They are. You've got two of the original partner group that have been around a long time. The original founder was Dan Linscomb. Dan's still in town. He's here in Houston. He's got another business that's been very successful as well, and I'm still a supporter of what we're doing over here for clients. And so Dan started the business in 1971 as Linscomb and Associates, and the business form had a few different looks over the years, but it was about the early 80s that really started to come together and take on that fiduciary fee only holistic wealth management look, and really grew from there. And so obviously very thankful to those that got this thing started and kicked it off and got us to a point, and excited that we have the opportunity to think about the next 50 years. And then the other to mention as well, Walter Christofferson, who chairs our investment committee and is chairman of the firm. He's been here about 41 years and is still very active, involved in the business today, as is Heidi Davis, who used to chair our wealth planning committee. She's also still very active in the business today. So those are the two original partners that are still here and active in the business.
And so looking ahead, what do you see as the future of financial planning and wealth management? There's been all sorts of technology advancements and evolving client preferences. Any trends, technologies, or strategies that you see, shaping the future of this industry?
Yeah, I mean, I think and this is something we talk to our team about quite a bit. It's the industry is getting bigger. It's as compared to when I'm started, and I'm sure for the folks that started this business, has changed many more times from what I've seen. But the business, the competitiveness, as I was coming along, it was the investment part of the business was becoming a little bit more of a, people would refer to them as a little bit more commoditized. I think today you see maybe conversation around the financial planning component being a little bit more commoditized. And I think those trends will continue. You'll continue to see there be more and more firms. You'll continue to see bigger firms. You'll see them get better and better at the investment, the holistic, bringing together the investment management and all the financial planning pieces and the delivery of that service. So, as we look out, down the road, we feel like we have a head start because we're already such a financial planning centric business. But we feel like if we're going to continue to stay competitive, you really have to have a great team that's there to take care of clients, that can offer a very holistic, very personalized approach, um, and meet clients where they are. So, we can have all this great technology, and we want to have all that great technology, and that's what we're working on building. But we're doing it in a way that, is all about the client experience and making sure that that comes across in a very white glove, personalized way. So again, how do you get better and better at knowing your client better, servicing your client better, providing a more and more personalized service, and in a more competitive environment? That's what we feel like you have to do if you're going to continue to succeed.
And do you guys, out of curiosity, do you guys have clients that had invested with you guys 50 years ago that are still with you guys?
I don't believe we have anybody that goes back 50 years, but I think we've got some clients that do date back a number of decades. But yeah, we've got multiple generations in some cases with certain clients that it was the parents, and the parents grew, and the kids came along, and now grandkids, and we might even have some great grandkids out there. So you have seen some of that.
And so, give us your opinion on artificial intelligence, right? Obviously, it's making its way into lots of different industries. We've seen it already. The equity market favoring artificial intelligence. How do you see it shaping? Our industry. Obviously, I don't believe in robo advisors, or I'm not even fond on the robo traders that they have out there. I will never believe that. When you're talking about someone's most important, the most important thing that they've built over their entire life, and they're going to get on the phone, or have artificial intelligence take care of it. There's a human component that's always going to be necessary. But what? How do you feel that artificial intelligence is going to come into this industry, and help individuals like yourself and other people in this space?
And Mike, I couldn't agree with you more in terms of there being a human element, and what we do represents people's life savings and hard work and all the time and energy and effort spent to get there. And people like that human connection, and somebody that really understands what it is they want to achieve with their money. But in terms of artificial intelligence, I give credit to our chief investment officer for referencing this, and I think maybe it was Bill Gates that said something along those lines about technology. That everybody probably overestimates the first 2 years of this new technology and what's going to happen, but it probably underestimates what's going to happen in the next 10 years.
Right.
So obviously, we believe that AI is going to have a meaningful impact to the business. And back to my prior statements, the way we're looking at this is, how can we utilize AI to make us more efficient, in what we do today, and providing that personalized experience to clients. So, taking some of those, what are the daily routine tasks? What are the things that your team doesn't love and enjoy to do, or what are the insights that would be helpful in, decision-making process, or how can it help you better communicate or recognize opportunities? So, I think as everybody, obviously, why there's so much excitement about it, it seems like there's sort of this endless possibility in terms of efficiency. And that, I think that also highlights something else there, with artificial intelligence and with all this financial planning technologies and software, it's pretty easy to get comfortable and, let the machines do all the work for you. But we continue to have a pretty strong feeling and belief that it is so crucial to have your own in-house expertise. And so, of course, we utilize outside resources and research and things of that nature. But for us, before you even think about something like AI, you've got to have the human element. You've got to have the understanding and ability to really know how to work the intellectual property of the business. And so we just want to make sure we don't lose sight of that, and really look to, as we think about these things. And I mean, we're being very careful about it. We're not a firm that's just going to jump into these things. It's a very thoughtful process for us. But again, it's got to have the human. It's got to focus on the personalized client experience, and you've got to have that. In our opinion, you've got to have that intellectual property.
Yeah, we had a guest on this week,
got to know
and
what you're putting out there.
I really liked the analogy that he used. He
Right.
said, finances it's probably one of the most important things and personal things to us, besides from our health. And until we're comfortable with maybe robots operating on us, I don't think that we're going to be okay with robots completely handling our financial situation. Phillip, outside of your professional role and the investments that your team really focuses on. Are there any investment opportunities or sectors that you're most excited about right now?
Yeah, from our perspective, it's just, it comes back to, it's so important to be diversified, to have a, well thought out investment policy that fits with your overall plan. And, and this is one of those things that comes out that, a year like this, especially, you've got an election year, people get, very emotional about politics, but, as you look through and you evaluate the data over time, as our team does a great job of, just markets have done well under both, Democrat, Republican presidents. It hasn't really mattered, as you look at the long run. And so in our approach, we really focus on, have your strategy, stick to your strategy, be very well diversified. Of course, there may be times here and there that, a little bit of an under or overweight in a position, or, a move, a tactical shift might make sense. But, I think in terms of this response, I think for us, it's so important to stay on track, stay true to your strategy, and, not let something like an election year get you off base in terms of what you're trying to achieve. And the markets really have proved over time that, sticking to a strategy
Thank you.
has been a successful approach to things.
And so, let's discuss some other sectors there. Um, you know, where do you feel, that commercial real estate and residential real estate are going? Do you feel like the other shoe has dropped for commercial real estate? I mean, those values have gone down pretty significantly. And I know the residential market, at least, where we're at, seems to be holding up to a certain degree. And other places where I own properties, I might have experienced some decline, but for the most part, they're still holding up. But the commercial real estate, I own, the only wish that I had was that I got rid of more of it in 2020. I got rid of more of my commercial property in 2021, right? I took some chips off the table, but not nearly enough, right? So, but where do you feel like that sector is going?
Yeah, so I mean, Mike, I'm going to readily admit, a little bit out of my depth getting into, specifics on outlook, around things like commercial real estate. But, just to go back to kind of a general statement, you had something like the pandemic that totally changed the outlook on a lot of things. And, it's as we were talking about a minute ago, with any asset class, with any sector, it's important that you do your due diligence. It's important that understanding where you're investing. And you can have any area of a particular market that could be interesting, is, if you've done good homework and it fits within that overall strategy. So I wish I had a better answer for you, but, really outside my depth in terms of talking about commercial real estate.
Oh yeah, no, I didn't. I wasn't sure if maybe you guys have some alternative investments. I know my financial advisor. I'm with Westwood. They're in Houston as well,
Sure.
um, and they've recently pitched me on putting money into this. I don't know if it was they called it an alternative investment. I don't know if it was a REIT or what it was, but it was a group of guys uh, um, that were going and taking office buildings and converting them into residential. And so I didn't. And they're like, oh God, this building sold for $250 to this insurance company, and we just picked it up for 80. And we're going to convert it into luxury condos and penthouses and things like that. And so I wasn't, I didn't know if you guys are doing those sort of investments as well, or been approached with
Yeah,
them.
no, appreciate that. And we're a pretty traditional shop in terms of our investment management strategy. So the vast majority of what we do is going to be traditional equity or fixed income of some type. So our portfolios typically don't have some of that alternative investment exposure inside of there. And you start getting into some different things in different areas of due diligence and complication and liquidity and taxes and longer duration in terms of how the investment might pay off. And it's as you evaluate returns over time, and you're comparing what you can do in a traditional portfolio versus something that has alternative investments. You've got to
Yeah.
do some work in there to always make sure you kind of have that apple to apples comparison. Yeah.
Yeah, thank you. And lastly, I wanted to delve into the economic outlook. Given that the country, we've doubled our debt in most recent years, obviously. And what are your predictions for the economy, near term and long term? Especially considering that when we did borrow this money, we borrowed it at a lower interest rate. I know the economy seems to be doing well, but what's your economic outlook there?
Yeah, a well-known fact. I mean, that the U.S. economy, largely driven by the U.S. consumer, estimates, 70%. And as we look at the U.S. consumer today, they still appear to us to be relatively strong. Unemployment still, at attractive levels. And so, if you've got pretty strong employment, you're getting some wage gains, and the consumer, is still out there spending in pretty healthy shape and managing their debt well. We feel like you have a scenario where the economy at a minimum can continue to be at least okay. And so, as we look out there today, we look at the consumer and feel like, they're doing pretty well. And there's still a lot of headline around inflation and interest rates and what might the Fed do next. But in that regard, inflation's not running at a 9% rate. We're down around 3%. So, we're in a very different situation than we were just, a few years ago with things. And so, keeping track, obviously, of what's happening with interest rates, they're not as low as they were. It's not, you probably not going to have maybe as robust activity in certain areas because you can't quite as easily go out and borrow as much money. But as long as the U.S. consumer continues to, look strong and perform well, we don't see too much stress in that area. We feel like, you can continue to have you can continue to have a growing situation.
And do you feel that we've had this Ukraine and Russia, and then it was Palestine and Israel, and now the most recent headline I heard probably a week ago are my people from Iran and Israel going at it. Do you feel that will that will affect the equities market in the U.S. at all, or do you feel if it doesn't directly if it's not directly affecting us, it's not our country, it's not going to affect us?
I think if you look back over history, you've had many geopolitical events, and obviously you have to pay very, very close attention to them and hope they don't escalate in a direction that does begin to directly affect an economy and markets, and obviously no one wants the conflict, and you hate to see what you see in the news headlines, but at the end of the day, I mean, I think geopolitical events have been part of the market for a very long time, and is something that's pretty consistently there. And so, you're going to have these points in times, and you're going to have these events, and I don't want to come across as cold about it, but the markets really do come down to that discounting mechanism. It's all about, okay, what are expected future earnings, and what's the rate at which I'm going to discount those earnings over time. And, so if you look at that equation and you feel like you've got a pretty decent chance for, ongoing earnings growth for where you're investing, and you're not having to discount that at too high a rate, then, and valuations aren't too far out of whack.
Very valuable advice.
You've still got to.
Well, I think that concludes our conversation today. Phillip, thank you so much for joining us, sharing your insights and your wealth of knowledge with not only Mike and I, but our audience. It's been a pleasure having you on the show.